Now, if you don't think that picking stocks is for you, how about picking the best stock pickers, the money managers who stand out? Well, for direction, let's turn to Daniel Wiener. He is the chairman of Advisor Investment Management. Daniel, it's good to have you with us. Thank you for coming in. Thank you. Explain, first of all, what it is you do, because you don't really pick stocks at all. You're just picking smart people.
Right. What people forget about mutual funds is that there are stock pickers behind those funds, and some companies, Vanguard being a good example, hires some of the best independent stock pickers in the world. I mean, these are people that if you had $25 or $50 million, you might be able to invest with, but you can actually do it through a mutual fund. We talked before about some of the people that we're very interested in, the Prime Cap Management Group out of Pasadena. There's a team at Artisan that runs mid-cap value stocks. So we pick stock pickers.
So the idea really is that for people to understand that the mutual fund companies, the people who are running these portfolios, they don't work at the mutual fund companies. The mutual fund companies go out, they look for the best stock pickers, the best money managers, and they hire them in various degrees, whether it is Vanguard or Fidelity.
Some do, some don't. Fidelity has a lot of in-house managers. Vanguard goes out and actually hires outside managers because its genesis was with the Wellington group. They have a number of Wellington management stock pickers who run Vanguard-labeled funds. So what you really want to say is, whether it's Vanguard, whether it's Fidelity, whether it's Artisan, what you want is to build good stock pickers, good bond pickers into your portfolio. So I don't buy or build portfolios of mutual funds. I build portfolios of managers.
All right, so let's talk about some of the things that are going on. I know that you follow what's going on at Vanguard very closely. I mean, I know, for example, we want to talk about some new Vanguard funds, some ETFs, right? These are bond ETFs. Tell us about those.
Right. Well, interestingly, as everybody knows, Vanguard's a big index house, and they've gotten big into the ETF market. They just announced that in November they're going to launch 7 more bond index or bond sector ETFs. What's interesting about that is that Vanguard already has a number of bond funds that are actively managed at Vanguard by a very capable fixed income team. When I look at the historical performance of the indexes that they plan to use and compare them to the active funds that are already in existence, what it looks like to me is that these indexes are going to be riskier. They are going to be more volatile. So it isn't going to be an apples and apples comparison where you'll say, gee, do I want the long-term corporate index ETF, or do I want the actively managed long-term corporate bond fund, which in fact is run by a manager at Wellington?
All right, so the idea here for the people who are interested in, let's say, bond funds is, would you be getting these Vanguard ETFs, these bond funds, at a lower fee structure?
You will, but remember that Vanguard is low cost anyway. So they will be slightly cheaper than the funds that are actively run, but it's not going to be material. Yes, it's a low interest rate environment, so every basis point counts. But if you have good active management, it will more than make up for 5, 10 basis points.
All right, we're going to continue the conversation. We've got more coming up. We're going to have more with Daniel Wiener. Interested in momentum investing? We're going to find out the best way to play momentum. Also, we'll talk about healthcare. There's some healthcare funds you ought to know about. This is Taking Stock on Bloomberg. This is Taking Stock on Bloomberg. My guest is Daniel Wiener of Advisor Investment Management. Now, Daniel, let's to reiterate for people that maybe don't understand exactly what it is you do. In other words, in following Vanguard, you're looking for the best managers that would then, let's say, come under the Vanguard umbrella.
Right. I write a newsletter about Vanguard, but I also have a money management outfit, Advisor Investment Management. We manage about $1 billion, and our whole focus is finding great managers who happen to run mutual funds to put into portfolios for our clients. We build portfolios of managers. So we are not only focused on Vanguard, but that was sort of the entry into this, because Vanguard farms out a lot of its portfolio management duties to institutional quality top-of-the-book managers.
All right, so for example, one of them was PrimeCap, right? I mean, is PrimeCap. PrimeCap, and they've got 3 funds. You noted that 3 of the funds that Vanguard has run by PrimeCap, but they're now closed.
Right.
So what do you do?
Last week, Vanguard closed the 3rd of the 3 PrimeCap management-run funds. The issue is these are some of the best managers, bar none, in the world. Their PrimeCap fund started about 25 years ago, has doubled the return of the S&P. Their Capital Opportunity Fund, which they took over in '94 or something, has tripled the return of the S&P, tripled the return of a mid-cap growth index. They have got 3 private label funds, which they started a little less than, I believe, 5 years ago. You can't buy them through Vanguard's brokerage service. Vanguard has blocked these 3 funds, but you can go direct and invest with the PrimeCap management team through their PrimeCap Odyssey funds, lower minimums, slightly higher expense ratios, but much smaller portfolios. So it gives the investor the opportunity to get PrimeCap's newest and best ideas. You also have cash flowing in as opposed to a closed fund where there is no new net cash coming in.
All right, so PrimeCap Odyssey.
PrimeCap Odyssey, they have 3 of them: growth, aggressive growth, and what they call stock. If I'm a younger, more aggressive investor, my son, for instance, is putting all his money into the PrimeCap Odyssey Aggressive Growth Fund. Our clients, we have a mixture of both for our clients. We use the Growth Fund, bigger companies; the Aggressive Growth Fund, smaller companies.
All right, so now let's turn to one of the Vanguard funds, because I know that invests in health. They've got a healthcare fund. What's the story there?
Well, Vanguard has a terrific healthcare fund. 2 issues. Number one, it's got a $25,000 minimum, which puts it out of reach for most investors. Obviously, everybody's talking about healthcare right now. The last time we had a healthcare debate in Congress, you may recall, healthcare stocks got hammered. By the end of the year, by the time it became clear that the Hillary Clinton healthcare plan was not going to happen, the healthcare fund had taken off and outperformed the market for that year. It is one of the best performing funds in the entire fund industry, bar none. I think everybody ought to have an overweight in healthcare. The problem is $25,000. Well, the same team that runs the Vanguard Healthcare Fund, which is a team out of Wellington Management, runs a tiny fund called Hartford Global Healthcare. The Vanguard Fund's got something like $18 billion in assets, and almost by definition has to be heavily invested in pharmaceuticals. The Hartford Fund has $400 million.
Much smaller.
Much smaller, much more flexible. They happen to actually be overweight in biotechs.
Hartford Global Healthcare.
Excellent.
All right.
Excellent fund.
Before I got to ask you, though, about momentum.
Okay.
Because, I mean, this is a market
because we're going.
Well, we're going, and also, I mean, it seems as though the market does have momentum behind it. So are there funds for people that want to invest with a momentum style?
There are. I don't think that you want a fund necessarily, but I think you want to find yourself a momentum-styled strategy that allows you to buy multiple funds, say. We manage portfolios at Advisor Investment. We have a specific strategy that is momentum-based, where we use ETFs, because they give us access to a lot of different sectors of the market and allow us to trade without worrying about short-term trading fees. No, we will not use leveraged ETFs. They're too dangerous, and our strategy has a month-to-month trigger for what we're buying. But, and I should say that any strategy we have at Advisor, I have money in. We are huge believers in picking fund managers. We look for people who eat their own cooking. We buy funds where the managers own those funds. I'm the first guy in all of our momentum strategies. Over the last 3 years, up 10% per annum. The market's been down 6% per annum. It's a lot of trading, but it works.
All right, and you're behind it. You've got your own money in there.
Oh, yes, and my family's.
Very good. Appreciate it. Thank you very much, Daniel Wiener, coming in, chairman of Advisor Capital Management. Appreciate it. Look forward to having you back in the future.